Legging 0-day Strangles, sponsored by the CBOE.
So learning to trade 0DT options requires reevaluating almost all of our experience from trading longer dated options.
Sure, because we don't have time on our side anymore.
When it comes to managing directionally neutral trades, we can consider two directions as separate or singular. So recently we've been experimenting using very wide 0DT iron condors to create a buying power efficient proxies for trading strangles. That's essentially what the bat was just saying. Mm-hmm. So what effect did managing the two sides of the strangles separately have on the 0DT trader? Meaning rolling up or rolling down. Now we're at a year. We started doing these things when we had like 6 months of data. Now we have a year's worth of SPX data collected every 10 minutes.
And it hasn't changed. Like the numbers have stayed.
Our numbers have gotten better. Like when we first did it, we had some bugs in the data because it wasn't that clean, but we've got it really good now.
But I'm just saying it hasn't, like the win rate hasn't changed.
Oh, no, crazy. Great. It's crazy, has not changed. Mm-hmm. We examined selling strangles at market open, either 30, 20, 10, either $30 out of the money, $20 out of the money, or 10. Just for reference, this morning I did $20 out of the money.
That's
so let's say the
index short strikes.
Yeah. I considered managing the winners at 25% of max profit. Losers were allowed to expire.
Which, by the way, that spread's now 320, just to let you know.
It's great. I know, we're just proving.
How fast they move.
Managing winners at 25% of max profit, the losers were allowed to expire. The reason we allowed losers to expire is because we haven't been able to figure out if there's a ridiculous amount of difference between managing your losers at 1x, 2x, or letting them expire. To the best of our research right now, the difference between all three of those over time is basically nil.
De minimis.
We contracted the daily performance of traders who consider the two legs separately, meaning you legged them or together, not legged, when it comes to time to manage. We tend to be goes on as a spread, comes off as a spread, but we will manage legs separately occasionally, okay? Just to keep things in context. We consider the results for those traders whose management was to close the position as well as for those rolling the winning positions, all right? So $10 out of the money strangles. Now, it's a little bit different than using delta, but whatever, it doesn't really matter. And what you're going to see here is that as you go further out of the money, your win rates are going to be a little bit higher. Let's just kind of walk through this. We do legged closed, legged rolled, okay, or not legged closed and not legged rolled. And the most stunning piece to this whole thing is that when you look at when you start legging things, you didn't do good. You did significantly worse, which is kind of you definitely took less risk, I think, but you just did worse. Like meaning that you chopped yourself up, which is something that we've done many times ourselves. I just couldn't believe these results because I was like, wow, this is a lot more choppy than I would have even thought. Legged rolled was...
I'm putting a full day's work here.
Yeah. You just did better not messing with success. Mm-hmm. Let's go to a little bit further out of the money. Now, the crazy thing here is that as you go further out of the money, the strangles, the results were basically the same across the board. You did way better not legging.
I understand. Yep.
You know, the win percentage was fine, but once you start legging, once you start legging the rolls and you kept this position live, you actually didn't make money. But if you just didn't leg and just, no legs, just roll as a group, you did. The old tasty thing is what goes on as a spread comes off as a spread. This absolutely was the result here.
I know, but don't you sometimes, I
know. That's the hard part.
Temptation to feel good about making the right leg. I mean, you have it more than I do. Like you have that.
I know. I like to leg.
That need to be recognized as as a trader. Like you have that need. It's something that just, you don't have it.
And as we go to $30 wide, the results again didn't matter how wide we went. It didn't matter how narrow or how wide. Yeah, there's more outlier risk, in not legged and rolling with not legged. But the reality of this is, if you want to make money, you're better off not legging.
Staying mechanical is really what
you can close and you can roll.
Right.
but you got to do all four sides. Just keep it mechanical.
Right.
Managing 0DT winners based on profitable legs was generally counterproductive. The effect was very minor when positions were closed, but rolling winning legs in just set us up to get burned by whipsaws. So when trading 0 TTs, remember to maintain appropriate position sizing and expect to lose a few dollars needing far out of the money long options to control the buying power. Essentially just saying, kind of what goes on as a spread comes off as a spread.
Very good, sir. Good job. Good job out of you. Good job out of the team. We love the 0-day research that we've been doing each week. Let's keep it up. It's very nice.